we had a challenging quarter. Primarily, the global backdrop has been weak. The geopolitical challenges have also, turned the situation a bit more complex. However, I think the India story continues to be robust, and the market is looking at India. We see a very strong economic and growth in the steel industry in India in the first half of this year as well. Post 2 consecutive years of growth of about 30 to 40% in the steel industry. We have seen, I would say, increasing exports from China hitting the global steel industry at large on the back of a weaker demand in China. That has disrupted the pricing in India as well and resulted in a drop in the realizations overall. However, the good thing is that China has announced some stimulus measures, post which there is an improvement in the sentiment in China and the steel industry at large. We are looking forward to China stabilizing its domestic demand, and that should moderate the exports going out of China. Their production has moderated a bit, and I think that should help also reduce the exports output.
Right. I believe that you are expecting to see steel price recovery and lower coking coal costs in the second half of this financial year, which is also boding well for your operating level performance. Do you think that's what investors are taking heart from, aside of what's going to happen with infrastructure spending and how you're on the front of executing some of those big projects?
Yeah. So I think, the first half, as I said, the first half, while the challenges were there, from an Indian operations point of view, we did quite well in terms of volume and in terms of domestic sales and profitability. So that's one thing which the market is looking at. The second half of this year in India is going to be seasonally very strong. Historically, it is as well. Also, the capex this year is likely to be back-ended. So 40% of the capex which the government had announced approximately has got spent in the first half of this year, and about 60% would be spent in the second half of this year. The monsoons have been good, and so we do expect a rural recovery coming up. So a strong domestic demand in H2. Our volumes from new capacities which have just been commissioned in BPSL and the Vijayanagar furnace is in the process of ramping up in H2, and that would give us additional EBITDA going forward in the second half. We are looking forward to a good in terms of overall demand in India. We expect the year to end at about 150 million tons, which is incrementally about 14-15 million tons from last year. And that will again be a good tailwind for the capacities which we are coming in with.